Oh, yeah. Here we go. Practice acquisition. There are pitfalls throughout the entire process. If you want to buy a practice, this is how, folks.
Acquisition Unscripted. The truth when buying and selling a dental practice. And now your host, Michael Dinsio.
All right, guys. Welcome back to another episode of Acquisition Unscripted. As you guys know, Mike Dinsio here on the other side. If you're listening to us, thanks so much for chiming in. If it's the first time, welcome. If it's the last time, well, I'm glad we shared this particular episode together. Super excited about today's episode, as I am all episodes. Today we're going to get into something that I think is needed in the industry, especially as there's a lot of talk about dropping insurance, not working with Delta anymore or whoever. And I think that the conversation about enrollment and getting patients to say yes and giving them options to pay for treatment is very important. And today's guest is Stephen Johnson with Varidi. And a lot of you may not know what Varidi is. And that's why I love this podcast, because we can get cool things out to the audience and share information. But essentially, well, and I'll let Stephen really get into the weeds with it. But essentially, it's in the same vein as like patient financing, but it's not. You all know Care Credit and Lending Point and Cherry, and there's a bunch of them out there. This has a different twist, so stay with us. But Stephen, welcome to the show, my friend. We've gone back a long time, man. We even did some training for you guys. Like, this relationship goes back a long time. Welcome to the show, man.
Yeah, Michael, great to be here. Thanks for inviting me. And you're right. I think we go back to like 2018, my friend.
Oh my gosh.
Back in some of the your earlier consulting days, and now you're just a seasoned vet.
Now I'm a seasoned vet. That's right. I mean, I like to think so, but every single day there's something I'm learning. There's always something I'm learning, which is cool. But yeah, man. So give us just, high level. What is Varidi? Varidi. I have to think through that. Varidi. What is Varidi? What's the mission? What are you guys trying to do?
Yeah, well, we're trying to make it easier for more patients to accept treatment at the base level. And there's, as you mentioned before, there's a number of companies, financial institutions out there that provide an option when a patient can't or doesn't want to pay for treatment in full. One of the barriers to paying for treatment is people's credit, terms, interest rates, a variety of factors that ultimately cost maybe the patient more than what they would pay if they were just paying out of pocket today. But the reality is people need options, especially in dental, especially in today's world of inflation. Things just costing more. And so the ability to take a treatment plan and put it onto a monthly payment that is ultimately guaranteed by Varidi. And so you're right, we have not been the traditional model that maybe a lot of your audience members are familiar with, which is the Care Credit model, right? Like, hey, let's take somebody's credit. They're either approved or they're not. Here are term options. Varidi's always been a little different. We approve everyone up to $4,000 in treatment, and our sweet spot in the dental space is really people looking for price points between $400 and $4,000.
Yeah,
we are not, for instance, you probably have some audience members that maybe focus solely on like dental, high ticket dental implants as an example. There's other great companies out there that can, kind of meet that financing need. Because we say yes to everyone, regardless of their credit score, it kind of forces us to be a little bit more mindful of that, of those bigger ticket items, because, at the end of the day, we want to provide a helpful service to the majority of treatment cases, which certainly fall under $4,000.
Well, that's actually a good place to kind of not pivot, but like kind of get into, right? So you're throwing around some words that come off your tongue very easily because you have represented and help run and operate the company every single day. I think the audience is not used to hearing guaranteed approvals, 100% approvals.
Sure.
So let's just start there, because I feel like this is a very it's not a complicated topic, but you can get into the weeds and we can lose some people. So let's make this digestible. So essentially, when you say that Varidi offers a guaranteed approval process, I think people on the other end of this phone, their ears are going to perk up, because the number one reason why front office people don't offer third party financing, or companies like I just described earlier, and I don't even think that those folks are true competitors to your core product, but I guess we could have that debate later, and maybe you agree with that. But when front office people, well, let's back this up. Okay, before we even go down guaranteed approval, I think we should probably have a conversation about why front office folks don't even offer Care Credit, Varidi, Cherry, Lending Point. Like, I doubt you clinicians listening realize that the front office team does not utilize most of the tools that they have available to them upfront to accept treatment, to help their patients accept treatment. Stephen, is that a fair assessment? Would you agree with that? Before we even get into your product, let's talk philosophical. Nobody is even offering patients this option. It's really true. It's true.
Yeah, I mean, I would say from the dental industry and the clinician, or people who are working in the front office, sadly don't represent the interests of the ownership like they should, right? And there's also just what's the level of altruism that the office has when it comes to helping their patients, right? Are they going to do everything that they can do, or are they just going to do the easiest thing, which is, hey, Michael, this crown costs $1,800, and how are you going to pay for that today? And Michael says, well, actually I need to talk to my wife. We've got things coming up. So let me talk to her and get back to you. Right. And that patient walks out the door. Yeah. Right. Because I know personally, I'm a prideful individual, right? I'm not somebody who likes to raise my hand and say,
I don't have enough money. I can't afford this.
Right. So I'm going to make excuses. I'm going to, make up stories just to get myself out of that uncomfortable situation.
Hell yes. That's exactly what's happening. That's exactly what is happening. People are not going to admit that they don't have the cash. In fact, if you go back and listen to the beginning part of the Care Credit episode that I did in 2020 or 2021, I don't know, we talk about this actually, that a third of the patients, I think, don't even know how they're going to pay their next bill or something like that. Don't quote me on that. But essentially, people are living paycheck to paycheck, folks.
Yeah, absolutely. And so, another stat, and it's maybe outdated, is just that people have somewhere, the average person has somewhere around $500 in discretionary income at any single point to pay for something.
In their checking account? You mean like the savings account?
Like, hey, that's and so the idea that your last $500 is going to go towards a dental bill, in comparison to just living their life and getting through the week, getting through the month, that's right, is a stretch. And I would have to imagine that, your audience isn't, only looking for that percentage of people, that has unlimited space on their credit card or unlimited funds in their bank account. It's a range, right? You could be in the most, highest per capita area of your state, and still you're going to have folks that need the convenience of payment over time. So I love that you brought up like kind of the bigger question of why aren't people talking about this?
Yeah.
And it's, just to be since it's just me and you talking, like,
Yeah.
it's laziness, right?
It
Like
is.
there's and they're not maybe incentivized
Yeah.
as the person at the front desk, which
Yes.
I would think if I was a dentist, I would be so distraught to learn that people are needing help and my team isn't offering resources that we've already agreed upon.
100%. Let me add to that.
Yeah.
I don't mean to cut you off but this is unscripted. It's dialogue. Interrupt me. I will tell you the last time I actually looked into this, it was actually a while ago. It's sad. I should look at it more often as the private practice the consultant, but I'll be pissed every single time. I can almost guarantee it. The last time I did a study where Care Credit was involved, they can do a study and tell us how many times it was presented. This practice that and this is the theme, right? And we're going to totally differentiate Varidi to those third-party finance companies. But in this particular example, this practice was doing over $2.5 million. This is a big practice. I mean, we're probably talking over 5,000 patients active, maybe more. Actually, probably, yeah, maybe not 5,000, but maybe 4, somewhere in there, right? The point that I'm getting is that they can do a study, if you're curious, if they have Care Credit in that office. And there was 3 applications in 1 calendar year.
Blows your mind. Yeah.
That literally blew my mind.
The number of people that didn't opt into treatment. I bet it wasn't 99% of people were saying yes.
Exactly. I mean, we track acceptance rates. So the acceptance rates of we talk about dollars per accepted. So dollars diagnosed versus dollars accepted. Dollars, not patients. So I lined up 10 patients, and 6 of them said yes. That's 60% approval. That's what everybody thinks case acceptance is. It's actually not true. If out of those 10 patients we diagnosed, I don't know, $1,000 total, we would want greater than $4,000 to be accepted. So that would be the national averages. 40% of all dollars diagnosed are accepted, not patients. Okay, that's the national average. I'm not saying that's great. I'm just saying that's the national average. That's actually kind of sad if you think about it. Only 40%, and this is the piece. This is the piece because they don't even at the front offer it up. And you said lazy. I think it is lazy. Definitely some lazy, but I also feel that's one reason. Yeah. I think people in general are scared about talking about money. You said patients are prideful. I think the front office people are afraid to even talk money. Like just offer it to everybody. Who cares if they look like a bum or a millionaire? Offer it to everybody.
I mean, when we train our clients, because this is a big talking point for our team to walk through, how do we address this subject and how do we make this comfortable for the patient, for the office? It is being just very casual about it. Like, hey, because at the end of the day, most patients actually want to pay for everything today, right? If I've mentally bought it, if I believe that, and I think this goes back to your friend Paula Quinn. I remember something that stood out in my mind. It's like, first thing, they want to believe, the doctor needs to make them believe that they need the treatment, right? Like just for their own personal health. Like that's number one. And then number 2, can they afford it? Like those are the 2. If they don't believe that they need it, they're not going to get it. If they can't afford it, they're not going to get it.
That's right.
And so
half the battle is in the back of the office, but the other half is at the front.
Right. They need to work hand in hand. And just the, offering somebody, we look at it as a 1, 2, 3. And you're right. We should differentiate ourselves. We really aren't a competitor to the Care Credits of the world. We're the solution when Care Credit doesn't work out.
So let's dig into that. I love where you're going with this. How do you differentiate Care Credit or insert third-party financing? Forget Care Credit and Varidi, because it is 2 different things. Go ahead and peel it apart.
So number 1, person takes out their debit or credit card and pays for the treatment. easy, no brainer. That's what most offices are equipped to handle. And if they're not, they're definitely in trouble.
Right.
Number two, it's, hey, well, good news. We offer financing options, and you just listed off a couple of those. And that's where they qualify because they have the appropriate credit and they can get on a term plan, like they're financing a car. But the reality is that it really varies, but just imagine somewhere in the neighborhood of 60%, like your early example, of people don't qualify for a financing option.
I mean, is that the range, Stephen? You've done way more research on
this.
It
varies so greatly by demographics and area of the country.
But just being super generic rule of thumb, 10 people apply. Who cares where they're at? Iowa, the Pacific Northwest, how many get approved? 10 people apply, 4
to 5 people.
So this is probably why the front office people will say, well, that's why I don't do it. I'm embarrassed that the other 6 we said no to, right?
It's an uncomfortable conversation.
Very uncomfortable.
Yeah. They throw out a solution and then the patient fills out the information and the patient gets, denied.
That's right.
And so that's where we come in and we say, hey, we can help with every single one of these patients. Now, why does a doctor want to use financing first? And the main reason is because the bank is going to pay that doctor X% of the total cost of that treatment today, right? Next few business days, they get a deposit into their account for the treatment, less the cost from that financing company. Now with Varidi, we're going back to one of your earlier things was, what does a guaranteed payment plan mean? Well, we're essentially replacing the office's in-house ability to put a patient on a recurring monthly plan. Mm-hmm. And let's say it's a plan of $1,000 mm-hmm. and we break it up into a 10-month term. We're paying $100 to that dentist each and every month for the next 10 months. The guarantee comes in that is if the patient disappears, we step in, we continue to make that $100 payment as if the patient was making the payment, and we deal with the receivable on the back end so that the office doesn't have to, right? Offices have been familiar with putting somebody on an in-house payment plan for years. Like that's not a novel idea.
Yeah.
But they still have to manage it. They still have to take on risk, right? And at the end of the day, they don't really want to do either.
Let's talk about that, because that was a great way of saying it. So as a consultant, I am totally against being the bank in a dental office. I do not want you, especially buying a practice, you're desperate for relationships. You really want your patients to love you. You might even walk into a practice that has a lot of AR at plus 90 because this particular office is doing in-house financing. And that's like kind of like a no-no. We don't want to do that because the risk. You said it. It's the risk. And so Varidi has come up with a solution that basically allows you as the provider to create in-house payment plans of something that I'm saying don't do without their guarantee.
Right.
But they are putting this guarantee on it that says if the patient decides that they don't want to pay you, Varidi will step in. But we probably should define it a little bit. And I know some of these things have changed over the years. Sure. So we should probably define it. But in theory, folks, that is it. It's your ability to say, hey, Mike, I do have the ability to put this on a payment plan for you if this is too much, or you just want a monthly payment. It might not be. Don't even use those words. See, Paula would be better at this episode than me. But like, essentially, you almost want to offer this up to almost all your patients. Now, of course, if they want to pay full up, great. But again, yeah, go ahead.
Well, to the patients, it's not a big difference, right? Because they're paying that financing company monthly as well. Right? They don't. To them, it's a monthly payment. To the office, it's the difference of getting paid now or over time. And look, I'm not going to argue. And the reason I say we're not a competitor to those financing options is because 99% of the time we're going to lose if hey, which option do you want? Do you want the one that pays you everything today, or do you want the one that pays you over time? Right? Well, it's the one that pays you today.
Exactly.
However, what's better? 60% of those patients that didn't get approved, walking out the door and not getting the treatment they need, or you realizing that revenue as a practice month over month for the next however many months is of that term. So, our solution isn't the catch-all for every single patient that walks in the door. In many ways, I would think that offices, you don't want 50% of your patient base on a monthly payment. But if we can increase 5 to 10% production each and every month because there was people walking out the door that are no longer, and you are getting paid each and every month. One of the reasons that we like dentistry is because it's an industry that isn't as, the cost of material and goods is less than, say, if you were a contractor, right? Like if you hire somebody to do a remodel and it's $5,000, you can put them on a payment plan. But that contractor has to spend a lot of money in material day one to start that project.
Right.
When we're talking about a root canal or a for the endodontist or that crown example from earlier, there's costs, no doubt. There's but on an $1,800 root canal, Mike, what do you think that they're paying out of pocket today?
Oh God. For a root canal?
Sorry, I keep saying root canal, but I keep meaning to say crown.
Crown depends on the fee schedule and what part of the area. Let's just say $600, $800, somewhere around there.
So it does take a few months to kind of hit that break-even point. However, you're continuing to get paid, after that patient is well and good and out of the practice. So, going back a few minutes, when a practice owner can help their staff realize that it's a take payment today, offer financing, back it up with a guaranteed payment plan. You do those three things, and that's just part of the script or the conversation that all of your team has. The production is going to go through the roof because there's so many people that are struggling to afford treatment, and there's so many offices that are hesitant to offer additional options because the easiest option is the one that they're comfortable
that's offered.
with.
Yeah, I mean the need for this is so important. I can't overstate, folks, how patients do need more options just to be communicated. This is something that you should track. Our front office coach, Stefani, chimed in on LinkedIn this morning and said the relief of getting payment plans out of a practice is vital. I mean, this is someone that managed over front office people, coaches our front office people. Getting payment plans off of the practice responsibility is vital. And she said front office folks aren't equipped or compliant when it comes to in-house payment plans, because you can offer these things as the owner. You can set financial arrangements with your front office people, but how often do you go and check on those things later? Are they staying up on collecting the payments? Are you storing credit cards, for Pete's sakes? Don't do that. There's so many risks, because I just had a client get hacked from some ransomware. Thank God we didn't have any credit cards that they were able to get a hold of. So there's all kinds of things of why it makes sense to use a company like Varidi just to get that responsibility off the table. So Stefani couldn't be more excited about that. Let's talk about the approval process real quick. So so big picture approval process, what's that look like? Because again, if you're not approving people, well, who cares? Because Care Credit's only approving four people out of 10 anyways. So are you really solving here? So let's dig into the approval process.
Yeah. So again, our sweet spot, from a patient responsibility is 400 to 4,000. It could be technically a little bit less, but we hope that most offices, you don't want to dabble around in $100 payment plans. And so what we do is there's a application that either the office assist the patient with filling out, or they just text or email a link to the patient and they can fill it out on their phone while they're sitting in the office.
Or sitting in the chair in the back.
Or
Even
sitting
better.
in the chair. Yeah, right. Where they're a captive audience. You're not sending them out the door to say, fill it out later and get back to us, because you're going to, it's a huge drop off. So the patient enters some basic information, or the office, puts in, gets the process started by putting in their name and email, phone number, that kind of thing. And the cost to the patient is 18 to 22%. So we'll just say it's 20% to pick a number. So let's use an $1,000 example. There's a patient that walks into the door. They can't pay $1,000 today. They don't qualify for financing, and the office sends a link to their cell phone while they're in the chair for the Varidi guaranteed payment plan option. We're going to charge the patient 20%, or roughly $200 today, to initiate the plan, and that money goes to Varidi. So $200 on day 0 goes to Varidi, and then the office assists the patient on kind of, we kind of have certain offices like to offer certain types of terms based on amount or, their own policy. And
so they do have control over how much they want to offer the patient. So like, correct. I want to break this up and give them max.
So
5 months or whatever.
6 to 24 months is our range. And we can narrow it on either side for every single patient, or we can just create tweaks in the back end so that there's, it's 9 months for every single patient, as an example. That's just what they offer. So on $1,000, patient pays $200 today, and then $100 a month for the next 10 months. If the patient breaks down along that process, we continue to pay that $100 a month while working with the patient on the back end to hopefully get them back on track, or, ultimately we might have to forward them off to we're not a collection agency, but, we would handle that process, going back to your AR point a little bit ago, right? You don't want them making phone calls, sending out letters, text messages.
Well, it takes the front office a lot of time to be calling and collecting and chasing people down, getting credit cards, all the things. But essentially, you're approving people for, what did you say? Up to what? Pretty much 100% of the time? So
good question. We about 50% of people will qualify for up to 4,000, but we don't do it in the sense of, sometimes you apply for a credit card and you're like, you have $16,000 in credit, but you might be going to the store and just putting $200 on the credit card. You don't need $16,000 today. We say, okay, what are you asking for? It's $875 or it's $2,350. Does that patient qualify for that full guarantee? So we offer a scale, right? Because Mike, you might make a certain income that allows you to qualify for $3,000, and that's what you're asking for. And maybe the other patient will put a payment plan together for the full amount, but the practice is maybe only guaranteed $2,000 of the $3,000. So the average ticket amount that we see offices submitting to us is under $1,600.
Okay, so actually, I want to make this super easy to digest, and I know you can't sometimes give just a direct answer.
Well, it's not a direct answer. I mean,
it's a metrics. It's a metrics. Yeah. But what I'm trying to do is I'm trying to help. You said 50%. 50%. So you're already better because you said care credit, and the rest is around 40%. I'm trying to show the audience that you're saying yes more times than saying no. And if you're going to say yes, let's say 75% of the time, what's the max? Like, I'm trying to give ultimate security to the front office team to say yes every time. Does that make sense?
It absolutely does. And just to be clear, we'll put somebody on a payment plan for the full amount, but maybe we're not guaranteeing the full amount.
Right.
Now, that does kind of go back into your earlier problem of there could be, it's kind of up to the office. Like, is it better to have 90% of this treatment amount guaranteed, or would I, because in theory there's a 10% exposure in this random example, but the majority of the folks that we work with need and use us on a daily basis for cases under $2,000, and over 90% of those cases are approved for that full amount.
90?
Yeah. So
under 2,000.
Under 2,000.
So 90 folks. So let's just digest that. Okay. I'm a numbers guy. I'm totally tracking you. My guess is some people we may have lost in that last segment. So let's make this super simple. A request to Varidi for 2,000 or less, they're saying, statistically speaking, 90% of the time people are getting approved for anything less than 2,000. So statistically speaking, he can't guarantee it. But that's like the common, that's a very common amount, a crown, different things. That Stefani was on the phone, I'd ask her what kind of things fall into that. But essentially, if your front office person had the ability and had the confidence to say, hey, your treatment plan's $2,000 or $1,900 or $1,800, whatever, she or he would have a 90% confidence level that Varidi would say yes to that. That's the key.
And the kind of the baseline cutoff is around $1,500. And that's over 96% of the time that somebody qualifies for $1,500.
That's great.
So, and again, that's different practices have different fee structures and patient responsibilities, right? At the end of the day, we're looking at the patient responsibility, not maybe the total cost of treatment. Maybe insurance is kicking in, X number of dollars, and we're helping on the remainder. So that's how our guaranteed payment plan works. And I don't want to, maybe I don't know exactly how much time we have, but we have a different program that we launched, kind of even since we first started working together, that is directed specifically at clear aligner kind of.
I was just gonna go there because I noticed that you said 4,500. Did you say up to 5,000? 4,000. So imagine a world where I come in and I want ortho, or you sold me on ortho. You diagnosed ortho. All right. And again, although I would really never officially endorse a hybrid model because you're still carrying some of the risk, but essentially, if I came in, you said Invisalign was 6,000, Varidi and Steven could guarantee that they would help the practice or the patient. They would pitch in 4. Then that means that the practice would, let's just say it's $6,000 treatment for ortho. That means the patient or your risk exposure would be $2,000, essentially. 2 plus 4. If the patient bails, you're getting 4. You're covering your lab, which is around 2,000, 2,500. So it's kind of it's a lot less risk is what I'm trying to get at. Steven, how am I doing on that pitch?
Yeah, you're doing good. The only thing I was going to say though, for ortho specific cases, whether traditional orthodontia or Invisalign style clear aligner type of cases, we have a different program that approves everyone up to $4,000. So like 100% of the time for those specific cases only, where we do what we call level payments, where it's, you take the total amount and you add only 10%, so we would charge on a 4,000 case, $400. So the total case is $4,400. And because the reason we give a significant price break to the patient is because these ortho cases there's lots of touch points. There's a deeper relationship, right? It's not like I have tooth pain and I'm randomly walking into this dentist today to receive care and help the pain go away. But then once the pain's gone, I don't care. I disappear, right? That's why there's a little bit more risk in the general dentistry world. Mm-hmm. But for any general dentist that also offers clear aligner cases, we provide a special, unique, where we approve 100% of people, 100% of the time for $4,000.
For ortho
For
specifically.
ortho.
So they would have, so in the application that gets text while I'm in the back and I know it's an Invisalign.
We have a clear delineation of, hey, this is an ortho case in comparison to a general dentistry case.
That's pretty badass. So I again, folks, the big concern when dealing with clear aligner is carrying that lab. So if you can offset the lab by guaranteeing this option, then the rest of the guaranteed amount minus lab is profit. And then hopefully the patient pays you the rest, right? So I love that, and I think that's super. So that's super cool. Any statistics on your product inside GPs that totally get this? Like, do you see practices that are just, I'm sure you do, that are just get what you're doing here, and the front office is just totally dialed? You've got to see some case acceptance that's probably off the charts.
Yeah, I mean, sure. Yeah, we like to, for an office that has adopted that kind of 1, 2, 3 approach. And again, we're not saying, fire your finance company, keep using them. But when they incorporate Varidi as well, and again, depending on the size of the practice, how many, seats they have, and so forth. But we're seeing anywhere from $5,000 to $20,000 in production per month, right? So on a smaller scale practice that is talking to folks about these types of options, they're going to see a production increase of about $5,000. From a larger practice, getting maybe, we're talking somewhere in the neighborhood of 10 patients a month.
Yeah.
Maybe that's a blend of general dentistry and ortho if they're offering these ortho products. Right, an increase of $20,000 a month in production that, again, would otherwise walk out the door and either not get the treatment they need or delay it, go somewhere else, whatever the case may be. But it's not happening today in that practice.
Yeah.
So,
yeah,
is a couple $100,000 a year in production? Does that mean anything? If it does, we're certainly here to help. But if you're like, no, we're good, we've got all the business we need. We don't need it.
That's great. I mean, anything that's going to help get patients to move forward with treatment when they otherwise have barriers, the $500 in their checking account. Let's talk about the worst case scenario process as our last little segment of this podcast. And that is if a patient decides to bail, the fun part, right? So, essentially, I'm a patient. I come in, you diagnose 2 crowns. My obligation might be $1,600. The insurance covers the rest type situation. Right. Sure. So now you send me a text. I apply. It's $1,600. You say yes, because it's under that 2,000. Good 90% confidence there. So far, so good. The office decided to offer me a year to pay that 16. Cool. Payments are super low. You get paid your fee up front. Then the amount gets spread over time. Mm-hmm. And then let's say I'm 4 months in and Varidi guaranteed all 1,600. I'm 4 months in and I just decide to ghost everybody. Yeah. Walk me through how that gets handled for the office.
Yeah. Well, the first thing that I think it's important to know is that the most people that miss their payments, it's an accidental oversight. Right? They just weren't managing their money super well, or they had a banking situation where they're changing debit cards and so the process, the payment failed. We have a whole team on the back end dedicated to getting people back on track. We say that phrase, an infinite amount of times, right? What can we do to get them back on track? And so there's a whole customer service element that we take a lot of pride in that is dedicated to making contact with that individual and getting them back on track. And oftentimes, if it is, it could be, the office maybe put their payment plan on the 5th of the month, but they don't get paid till the 10th and the 25th of every month. Right?
That's real world. That's real world stuff right there. Yeah.
Right. So it's kind of like, that's just, so we our team might identify, Mike here is needs to adjust that payment onto a more appropriate day of the month so it's more successful and everyone wins. And so we take basically 20 days to cure an account, right? What can we do in those 20 days to cure that account? Now, the payment has essentially gone missing, right?
So
payment
now the office didn't get the payment, or Varidi stepped in. What's the process there?
Yeah. So after 20 days, we turn it back over to the office to activate that guarantee. And that comes through a variety of ways. It's emailed to them with a push of a button. They can activate the guarantee, or they can log, as we coach them to do, pick a dedicated time each week to review your Varidi accounts and to see if anything, see if there's any big red letter that says delinquent, because the delinquents are what people are concerned about as far as like making sure they get paid. So by clicking a button, that basically activates the account where the money is going to start coming from Varidi's account and no longer from the patient's. And so on the next payment cycle, so let's say it's February, what's today, this 20th, and the payment is due today. By basically March 10th, we're going to be sending the office an email saying, hey, that money from February didn't come in. We've been working with the patient. We've been unsuccessful. By March 20th, the payments from Varidi are going to start rolling in. So that 12-month cycle now became 13 months, right? But we believe that most of our clients would like us to resolve it with the patient before we have to send them to collections.
Okay.
Right? Because, but at the end, we give them ample opportunity. We have a system for phone calls, text messages, and email, of course, that notifies the individual that there's an issue, and we're here to help them resolve it.
So essentially, that balance due will still sit on the accounts receivables. It's still going to sit there, and the payments are still going to come in if you hit that button, and Varidi's guaranteeing those payments and you're paying it out. But yeah, Stefani's texting me on the side. Apparently she stopped commenting. She's the AR queen and does a lot of billing. So she's like, she takes a lot of pride in having nothing in the 90 days. That's what a biller should do. But it's important to note that Varidi is going to make those payments. You're not going to get a big lump sum, right, Stephen?
Correct. So, if we were going to do a big lump sum, we would have just done it in the beginning of the cycle. And honestly, part of the reason that we don't is because, again, we're usually taking on the folks that are a little bit more credit challenged to begin with, right? And providing them an option where we're spreading it out over time.
Yeah. So you almost act as a collect. You in a lot of ways act as a collection agency, although I'd never call you that.
Yeah.
But imagine your front office people not having to collect the time that you are giving your front office person for not chasing down, trying to collect payments, trying to make these arrangements. This is not what her job really is. This is what Stephen and his team are natural born killers for. And they're probably pretty successful at getting people back on track. They're going to be better than you. And so anyways, at the end of the day, the longer the term you offer, the office offers the patient, the longer the term, know that, because you're not going to get all of your money for that term. But do you have a lot of offices offering really long terms, or do you have offices doing like 6 months only type stuff? Like, what's the most popular way there? Mm-hmm.
Yeah, I would say that if they're opposed to the only offices that we recommend the longer terms are for ortho, because that's pretty standard in the world of ortho. Like they're used to that 2-year kind of those duration, and the offices that are dealing in more of the general dentistry, we think that 6 to 12 months is a good range, because at least you're providing some level of option, right? Mm-hmm. That makes it, versus like we're just offering you 6 months. The other thing that's a trouble with 6 months is that the monthly payment amounts can get pretty high. And if you think just practically, you don't want to put your patient on a plan that they're going to potentially fail at, right? Yeah. Like and if you take $3,000 and divide it by 6, right? That's a monthly payment that's quite a bit bigger than anyone's car payment. It's going to be like their second biggest payment obligation outside of rent or mortgage that they're going to pay, and it's for their dental bill, right? Yeah. maybe a little bit out of alignment. So if you're able to spread it to at least 12 months, we see a lot of success in that, because, of course we don't want people, the less folks that we have to pay on defaults, the better it is for our business, big transparency there.
Yeah. No, that's
but at the same time, if no one was ever defaulting, you wouldn't need to use a company.
You wouldn't even need it. That's right. That's right. Well, I'll end it on this, that also it just depends. And if you know your patient and the demographics, like I got with my mom, Thanksgiving, something like that. And she was talking about how she always does payment plans because she's on a fixed income. Mm-hmm. So, someone that might be older, that is good for the money, always, no problem, might choose a 6-month deal because all she wants is for the months to be divided out by 6. But she's good with that, right? So it just depends on who you're pitching and what their pain points are. I think more options is better, and hopefully that's been the message today, is that, like, we have to, especially with the millennials, zennials, and even the older folks. I mean, I was listening to some I was at a conference thingy. They said every day 10,000 people fall into the what am I trying to say? Over the age of 65. 10,000 people every day are going into the over the age of 65. And so our population is getting older. They're fixed incomes. Do your research if you don't believe Steve and I on how people would prefer payment plans today. I don't, but I'm in my top earning ages, and so is Steven probably. You get me in the older gen, I might be more interested in payment plans, and I know the younger gen definitely is into smaller payments. So,
Michael, I'll tell you what, my son's ortho bill is on a payment plan, and we paid a down payment, right? And would have covered those, the initial fee, and now it's $176 a month for. I hope it comes to an end soon, to be honest with you.
Last question: did Varidi finance it? I guarantee that.
Yeah,
he didn't use it. He didn't use it.
I'm in a small town, and we had to go to a whole other town to find the right ortho. Yeah.
Well, I busted you there, but that's okay. That makes total sense. Well, Steven, thanks so much, man, for being on the program and the show and educating the audience. It's a great option, folks. It's another option outside of the traditional, and hopefully it gets you guys thinking today. So with that being said, it was one of our longer episodes. Steven, thanks so much for being on the program, brother.
Appreciate you, Mike. Take care.
We will talk hopefully very soon. Thanks, man. Talk to you soon.
Absolutely. Thank you.
Tune in next time for another truth-filled episode of Acquisition Unscripted. We want to hear from you. Interact with your host, Michael Dinsio. Follow us on Facebook, Instagram, and YouTube. Comment and subscribe.